Hi everyone. I'm re-recording this video actually because we weren't able to save the live stream the other day, so I have to do it again. In the previous live stream, we went through some examples, 5, 6 examples. I had 10 examples ready. They're mostly the examples that have worked perfectly or almost perfectly. They all have their nuances, so each one of them is a bit different. Please, if you went through the video, this is one of the most important videos to truly understand the models. Please go through the charts, check those exact traits on your own chart, and see how they work exactly. Use the replay button, go through them. If you don't have the historical data on TradingView, use a free trial on FX Replay or anywhere else. There's some softwares that give you the whole historical candles. I can send them, and I will send them actually. I know one of these softwares. It's from a broker. It's a software, but I don't remember the name. I'll send it to you just to check the historical data in 1 minute, even from years ago. I'll send that. So for now, let me be as fast as possible and do this because today we have another live stream before FOMC. I'll start with GBP 8th of July example. Let's go to the 4 hour. By the way, I'm not sure exactly at this point when I did this trades, what was I thinking exactly on the 1 minute time frame. So there might be some nuances, as I said. You have to treat each trade in their own context. For example, we've talked about the weekly profile and how Monday is usually the low of the week, the weekly candle is bullish, and how Friday is the high of the week, if it's bullish, the weekly candle, and vice versa, right? Monday the high, Friday the low, Monday the low, Friday the high. But there might be some differences in these trades, and that's okay, because depending on the context, you have to adapt yourself to the candles and to the environment. Now let's go to the trades, 8th of July. Let's see what happens. I'll check it even on the 1 minute time frame, okay? So first, for each trade, I'll explain the context, and then I'll go to the lower time frame to check the trade, okay? In this trade, if we look at the higher time frame, we could see DSR that we have talked about till now on 4 hour. This is an area where on the higher time frame, everyone is relying on. They want price to come down again, right? So the higher time frame is to the upside, but I was looking for a short based on the lower time frame GC, but we know that price might probably go here, not in the short term, but eventually we're going higher. The other thing that will tell you that this will happen is that the SR level at this area has been broken to the downside, and we had PC. The LD has also been taken. So when the higher time frame lows are taken, and we have this obvious SR at the highs, we want price to go up. But at the short term, I was looking for a short based on this 4 hour GC. Let's go through it one by one. Okay, this is which day? It's a Monday. And this is Friday, previous week. Previous week was Monday, Friday. The weekly profile, it's that weekly profile that we usually after, right? We want to enter on Monday and close or take partial on Friday. Right now, this is Monday, again, candle opens, weekly candle, first candle to the upside, first 4 hour candle. Not the first one, but the initial candles. And then I wanted it to come down. First, they want everybody to go long, suddenly take out a short, take out the longs, and then go up, take out the shorts. In here on the lower time frame, we had an RTF. This was the SR. So the area that I was waiting for to get a breakout from. We had the GC, a really clear GC as far as I see, to the upside. We started 5 right here, and then we closed 5 right here and opened 9. So this 4 hour GC is a really clear one. Do we have an LD on the left side? There isn't clear LD. To be honest, this is the highest point that we have. It's a swing high. It's not an LD. Swing highs are different from LD. Something that is a bit visible, maybe on the lower time frame, it's more visible. It's here or here, this structure. This could be an LD, but it's not something substantial, to be honest. But I'll still keep it in mind, okay? But based on the 4 hour that has closed, and how far away from here, 10 pips. Okay, it's possible. Yeah, 10 pips is possible. Stop losses might be there. Let's see how it goes if we get a GC above this 4 hour. So we have the fractality here. We have the weekly. This is a weekly high, correct? We're not specifically waiting for weekly highs and daily lows and stuff like that to get hit. But at this point, for this trade, the GC coincides with a weekly high just before it because it's a Monday, sudden huge movement to the upside. And then this is the previous week's high, which is not a confluence. It's just a high that is obvious, and what matters to us is that it's very obvious, the level, multiple highs, and it looks like price can't move above it. That's why when we did the sudden move to the upside and close the candle like this, we know that it should, or it might probably come down, take the first low before the breakout, at least. These lows are usually guaranteed. These lower time frame lows are usually guaranteed, and maybe eventually take the weekly open or come below it, or maybe even take here. We don't know exactly because our take profit system is not just based on lows and highs, but also PCs and GCs and time-wise take profits. For example, we might close at the end of the day, regardless of where price is, or we might close at the end of the week, regardless of where price is. For this trade, the high time frame target wouldn't be this lows or here because of the overall context that I talked about. Yeah, it's a Monday. Monday is usually the high of the week, but in this case, since we're so close to the highs and we don't usually trade below highs, we don't short below highs. Yes, we know that's a rule, especially when the high is very close to us. But when it's this far away, there's a lot of space between these two highs. You can try it, but still, it will be a lower probability one, of course, because the overall target is here. You might even be better off looking for longs, but that didn't happen in here because we don't have a clear SR level at the downside, and we don't have a PC to the downside. So we might get one. We might, for example, be able to go long at some place around these areas. We don't know exactly what will happen because we can't predict the future, but probability says that we might get our short here. So I don't exactly remember what I was thinking at this point, but let's go to the 1 minute and see how this works. Okay. this is the start of the 4-hour candle, our GC at 5, and then it went up, it closed right here. So when it closes like this above the SR, we have the GC, we have the SR. This is an RTF. It's a definite RTF that you should take even if you get stopped out. Okay, you shouldn't lose these opportunities. You shouldn't be afraid or lose confidence exactly at the entry. When you have a good GC like this, you go short. But we don't go short exactly at the open of 9. We will wait for a lower time frame GC to the upside and to get our fractality exactly as we've talked about before. This is the high of the GC and high GC. And since just before closing this 4-hour GC, we're ranging like this, that means that if we do what we do on the higher time frame, because based on our model, the RTF model, since we're doing a reactionary model, we wait for everybody's reaction on the higher time frame after the GCs and PCs. Right now, if you do the same thing, since it's all about fractality, if you do the same thing that you do on the higher time frame to the lower time frame, what do you see right here? Suppose that this is a 4-hour candle. Just look at it like that. Would you short right here? If this is a 4-hour candle? No, we wouldn't short. Will we go long here? No, this is premium. This is in the middle of this 1 minute range, so we don't do anything here. If this is a 4-hour time frame, we'll wait for a GC, a 4-hour GC, right here, and then we'll go short, right, in this area. So we do the exact same thing for the 1 minute, because time frames are, maybe it sounds controversial, but they're an illusion. They're all the same. You could look at this as a 4-hour time frame. Right now, we will wait for a GC to the upside, and the GC happens at the end of the candles, right? We usually try to get a good GC on the 15 minutes, 30 minutes, 50 minutes, 30 minutes, and 1 hour, preferably. You can also go short or long on 5-minute GCs or 5-minute PCs. But you have to be more careful with the 5 minutes, because they can usually be quick. They might come very early, and you might think that's the high, because a 5-minute GC has closed like this, exactly, in the first 5 minutes of the 4-hour candle. When we start 9, at 9:04, a 5-minute candle will close. If it closes like this to the upside, you might think you have a GC, and you're correct, you have a GC. But sometimes the 5-minute is not that reliable for our reactionary model. And the reason is that, the logic behind that is that people don't rely that much on a 5-minute candle. They usually wait for a 1-hour candle, a 30-minute candle, a 15-minute candle. The higher the candle, the more they will rely on it. And this is really important, because that's the whole point of our model, right? And we've always said that we usually wait for reactions at the start of the 4-hour candle, the new 4-hour candle. That's basically, I think that's basically in most of the models out there. They usually wait for the open and then the reaction of the open and see where it goes. The PO3 kind of stuff, that's when the candle opens. If the doll is up right here, we wait for a bit of range. We get the manipulation to the downside. We go long here on a Monday, for example, and then we go up Wednesday, up again Friday. So at the open, when we get this manipulation on the monthly candle, that's where we go long, and we can hold for a month. And we do the same thing for the weekly candle, and for the daily candle, for the 4-hour candle, for the 1-hour candle, 30 minutes candle, 15 minutes candle, 1 minute candle, for all of them. Fractality, okay? Now, let's go 1 minute by 1 minute. The times where we will get the GCs are, we'll go with the 15 minutes. We might also add at 5 minutes, or, I don't know, maybe 10 minutes. It depends on the context, it depends on the LD. Sometimes you're not sure, so you might add to your position maybe a bit sooner, maybe use a bigger stop loss if you think you're going to lose the opportunity. It depends on the context. But right now, the first 15 minutes candle, the close of the first one, will be at the end of 9:14. Correct? We open this 15 minutes candle, which is the first 15 minutes candle of the 4-hour candle, at 9, and we're going to close it at 9:14. If we get a candle like this, and if we close it here with just a bit of shadow on the upside, or no shadow on the upside, that will be a 15 minutes GC, and we would go short here. If we didn't get any candle like this, for example, you might be ranging in the first 15 minutes, then this is not a GC. We'll let it go. We will wait for the next 15 minutes candle to get a GC. The next 15 minutes candle is 9. It will start at 9:15 at the end of 9:14, right? It will start right here, 9:15, and then it will end at 9:29. I'll remove this line at 9:29, and this 9:29 is, or it might be, a 15 minutes GC, correct? If this is a 15 minutes GC, then we have started this 30 minutes candle right here at 9, and we have ended it at 9:29. So this is actually both a 15 minutes candle, a 15 minutes GC, and a 30 minutes GC, okay? So it could be both of them. And that's also, again, the fractality that we've talked about, because a 1-hour GC can be a 30 minutes GC, and a 15 minutes GC, and a 5-minute GC at the same time. We'll see the example, and you'll know what I'm talking about. Let's go through candles. Okay, let's see where this 9:14 will close. Okay, it's closed right here. So this is not a GC above this 4-hour GC, the high of the 4-hour GC, and we should still wait for 9:29. If we look at it on the 15 minutes, it's going to be like this. So as you see, this 15 minutes candle has not closed above the high time frame GC. So we will wait. Let's go back to the 1 minute. And in the middle of this candle, or in the middle of this candle, we usually do nothing. We will wait for the close of the 15 minutes candle. In the middle of this, we will have, I don't know, 2, 3, 5 minutes candle close, which we usually don't care about unless they're very fast and very obvious and clear GCs. We might add our first position, but we usually don't do anything, just to make it more high probability, and we'll wait for the 15 minutes close. Let's see. This is also not a GC above the 4-hour candle, so we should wait even more. To see if we get a 5-minute candle, 15 minutes candle, 30 minutes, 1 hour. This is 9:29, so the next candle will be 9:44 and 9:59. We might also get 5-minute candles in the middle. If they're clear, we can take them. 9:34 is the end of the 5-minute candle, which started at 9:30, 9:30, 31, 32, 3, and 4. That's the close of the 5-minute candle. We can enter here, but this is not the high probability one, as we talked about. The 5 minutes is usually not the high probability one, unless it is clear, like this, because this is very clear. Small shadow. And you can also do nothing. You can wait for the 50 minutes. There are multiple approaches to do this. Some people will, not some people, in our model, me, if I'm talking about me and my model, I sometimes add the position right here at the close of this 5 minutes, because this range, this SR level on the lower time frame is very clear. The 5 minutes is very clear. The overall structure is very clear, but people have been waiting for a breakout of this, and it might reverse. So, because my stop loss is not like 2 pips, 3 pips, it's usually above 10 pips. The 15 pip stop loss will help me to manage the risk. For now, the TP doesn't matter. I'll just put it somewhere right here. For example, this 2 lows, equal lows, that are very clear, or maybe here, maybe here. It doesn't matter right now. Let's see how the entry will go. We've added our first 0.25. We never suddenly do 1% risk. You shouldn't do that. That's also possible, but you will go into more drawdown. If, for example, this is not the high, price will go above, maybe range. Maybe you don't get stopped out, but this drawdown will make you psychologically weak. You will go into more red numbers, and you'll see bigger red numbers. You'll get more scared. You won't be able to add to the position, and you will be emotionally impacted. And how I've built this model is that we want to enter at the highs and lows, at the absolute highs and lows, so that you don't get much drawdown, as less drawdown as possible, okay? Small drawdown as possible. Now, let's go. We've added 0.25. And the next, or maybe our main position will be at 9:44 or 9:59. 9:44 was not a GC. It didn't close above. So we will wait for 9:59. If we didn't get a GC to the upside, maybe above this high, or at this high, or above this area, we just don't do anything. We just use this 0.25 and let the price go down. This is a 5 minutes. It's not a GC. It's not above here. It's a bit above this area. It's not that clean. A bit of shadow on the upside. It's fine. You might even be able to add, but I usually don't do that. I usually prefer that I add at the high, at the entry, at my first entry, or above it if I'm shorting, or at my first entry or below it when I'm going short, when I'm going long. 9:59. This is a 1 hour close. You could again add here or not do anything. Since we're only 0 to 25% risk, you might be able to add to this. And you can also just do nothing and let the price go down or up so that you can add. But since we're not above the high, and we're a bit ranging right here, we shouldn't suddenly add 1% or 0.5% to this. You should be careful and leave room for the next GC, if there is any, at 10:14 to add to your position, or 10:29. Okay, 10:14 will be a 15-minute GC, 10:29 will be a 30-minute one. Okay, I'm gonna add another 25% at 10:14. Almost the same entry as the previous ones. Price is not going up that much. And we usually, no, not just usually, but almost all the time use the same stop loss for all the entries. This will be 0.75% risk, and I won't add anymore to this trade since this is against the overall context. Even the last 0.25 might be overkill, might be too much for this. So this is the most that I'm going to add. It doesn't matter how much it goes up. Even if it goes up near my stop loss, I won't add to this position. I'll let it go. I want to just risk 0.75. This is not a GC again at 10:29, and usually after 10:29, 10:30, after 11, we don't trade that much. We don't add to positions. We just let it go and do its thing. These are the actual trades that I've taken and I've posted on Twitter or with friends, but usually on Twitter. All of these trades that I'm sharing today and showing it to you, all of them have been shared before on Twitter, live, beforehand, usually with stop losses. That's the first trade and the first example. This is very clear, this low. I think it should be taken. Maybe after taking this highs. Yeah, this will be the main target. I guess it's, okay, right, this was the end of Monday. You could have closed at the end of Monday, or you could have closed below this low. But we usually, in our models, remember this, we take profit before lows when we're short, not below lows. Okay, not at the lows, but a bit below lows. Look for a structure, an LD, just below the low, right here, or right here. This is a very clear one. We close the trade in full at the LD, or before the low, at this small structure right here. On the 1 minute time frame, that's a bit maybe obvious, more obvious structure, but on a 5 minute, it's smaller. So we would have closed before this. We would have closed right here, especially it's the end of Monday. And maybe because we'll take this SR level, and as we've talked about before, maybe we have a long opportunity on a Tuesday, or maybe right here. But we don't do this. We wait for a candle, a PC, to close to the downside, right? Maybe take out the LDs, or maybe sometimes we don't have any LDs. Sometimes we have a first tap sweep, an FTS, or we don't have. It depends on the context, but a good PC is needed. A 4-hour PC, a 1-hour PC is needed in this area. And if we didn't get one, we just let price go without us. We also took this. Was this a PC to the downside? It was a PC actually. It was a good PC close below all this structure. We don't have a clear PC after under the 4-hour the 4-hour PC right here. So if we had something like this, a smaller time frame PC under the 4-hour PC, then we could have went long on Tuesday, but we didn't get anything, and that's the end of Tuesday, I guess. Maybe Wednesday will give us something below this area. Until then, we're not involved in this. We want it to go up without us. We don't care. It went up without us, and that's fine. We don't right catch this. The hard time frame target is reached. Thank God that we closed the trade on Monday, right here. We could have held till here, or maybe a runner till here. The way that you could have taken profits based on time, it could have been the end of Monday, it could have been just above this low, or it could have been based on the PCs. If you got a good PC to the downside, you could have taken profits, or you could have closed, right? The PC was this one, so you could have taken profits at the close of this candle. Now let's go to the second example. This was pound 8th of July. The second example, it's again pound 2nd of December. Give me a second. Okay, what have I done here? There's no clear PC or GC, but I guess this was a long position. Let's see how it goes. Maybe it's on a lower time frame one, below this SR. This is the overall structure. We have closed below this area in this section, and we have closed a weekly candle right here. This was Friday, the end of Friday, and this was a Monday, Wednesday. Okay, the trade was on a Monday, 2nd of December. Let's go to the lower time frame, see what I've done. I don't exactly remember all these trades on the 1 minute time frame or on all the time frames. Obviously, there's no trade right here. If I have longed GU on Monday, I should have waited for a close below this area. So let's see if we get a PC below. Monday started right here. Maybe I thought at the moment that a move to the downside and then going up would be nice. And then if we actually got the move to the upside first, then I would have shorted and aimed to this SR level, right? So it depends on where price wants to go first. Let me see how it will unfold. This is 4.55, so I would have waited for 5. And the end of 5 to 9, which would be, where am I going? Right here, and the open of 10. Open of 9, not 10. Right here. This would be the 4-hour candle. Let's see what we get. Maybe at the start of 5, if we get a good move to the downside and close a PC, a 1-hour PC, I don't know, or something like that, it would be nice. What we have is the SR level. We have this swing low. This is not an LD, it's a swing low, so I'll mark it as liquidity. And we have this LD right here, and this LD also. I mark only these two LDs because they're below this structure right here, this obvious structure. This is also an LD of this range, but going long above this structure right here is risky. We don't want to do that. When we want to go long and we get a PC, for example, like this, and the PC has closed above a structure, an obvious structure right here, even if it's a good PC, we don't go long. This is too risky. Even if it goes up without you, let it go up without you, okay? Go up without you. Because if you enter at the close of the PC after taking this LD, for example, PC closed below SR, then your stop loss would go just below this structure, which is not safe at all. And you shouldn't do that. It's risky. And by risky, I mean you might not get stopped out, but the percentage, the probability of you getting stopped out is more, the probability of you going into drawdown is more. So you don't do this. How do you know it will take this? You don't know. You shouldn't try to know, because that's not possible. You just wait. If it took it, you want to enter the trade. If it didn't take it, you just let it go without you. Okay? It will do this, it will create a PC, it will do something like this, then it will range and you think it will go down, but it will not, and then it will just go up. Okay? And you feel like, why? You're like, you can ask yourself why. Why didn't I know that this is low? Why didn't it take this low? There's no answer, because we don't know. Nobody knows. But we know if it takes this low, we will probably go long, if the probability is there. Okay? Let's see if we get a good PC to downside. This example might be a bit different because I guess I haven't waited based on the 4-hour that I saw. I haven't waited for a 4-hour close on the downside since, and the reason was that I guess equal highs on the upside. It's a Monday. On Mondays, I usually risk a bit more, not by percentage wise, but I mean, based on the context, I might enter a bit sooner. I might have a bigger stop loss, but I will become a bit more risky and a bit less cautious. Okay. At the start of 4, as we said, at the start of candles, we want good reactions. So if we don't range at this 4-hour candle, we don't do this, we won't wait for the next 4-hour candle to come down. And we will wait. But if we do this, suddenly at the start of the 4-hour candle, we come down and we get a 1-hour PC, 2 hours PC, then we might go long here and not wait for the close of the 4-hour. Sometimes it happens. Based on the context, you have to adapt. You have to think how you should do it. Okay? Especially if the PC is really clear. Now let's go. We're coming down at 8. We have 7.59 right here. But 7.59, that's a good PC. That's a really good PC. It's 7.59. So this is a 1-hour PC from 7, at the open of 7 to 7.59. But since here, even this LD hasn't been taken, and this structural low hasn't been taken, so I'm not going to enter this, right? This even doesn't matter to me, this LD right here, because the structural low below me is very obvious and it's still there. So even if it closes a 1-hour PC to the downside, I'm not going to touch it. Okay, we closed this 4-hour like this. We didn't come down, actually. Now let's see what 9 will do. I thought the trade was on 9.5, 5 to 9, but I missed my 9.5. I guess from 5 to 9, but maybe it was at 9. Let's see if we get a good reaction at the open. Yes, we took the structural low. Did we close a good PC on the downside? 9.59 right here. What about the LDs? This LD has been taken. This LD has not been taken. Let's go to the 1 minute. Okay. I did more than what I should have done, to be honest. Structural low. Liquidity. LD. This is the first LD and this is the second LD. After taking this, we're at candle 9 to 1, the 4 hour 9 to 1. We started 9 right here. A really good reaction at the first hour of 9. The manipulation to the downside. We want to enter below this low. We have a good PC at 9.59. The LD has not been taken. We could have longed at 9.59, but that's a lower probability one, I guess. I did it lower than this. One could have entered here, but if you enter it before the LD, maybe you're in a rush or something, you're not patient, you have to use a bigger stop loss, okay? Especially not, your stop loss shouldn't go below this other LD that is right here. 15 pips will go exactly right under here, so you might use a bigger stop loss if you think it will go and reverse without you. There isn't much below this LD. We have these structures here. They're a bit far away from the 9 a.m. and this 1 hour PC, so we will trust these two LDs and this structural low to reverse the price. It might not happen. We might get stopped out, but we will try. It's also a Monday, so we might be able to hold till the end of the week, till the end of the day, or something like that, if the high time frame context supports this. But I guess my take profit was, I don't exactly remember the take profit, to be honest. But let's see. If we got a good GC to the upside, we will take profit. We'll also take profit at the end of the day. It doesn't matter right now where price will go. Let's see. On the 1 minute, after taking the first LD, we have 10, 1, 10, 2, 3, 4. We have the first 5 minutes below the LD. As I said, we could have also entered at 9.55, but we should do a bigger stop loss, preferably. That's a bit more risky since the LD has not been taken, and it's on the 1 minute is a bit ranging right here before the LD. Okay. 10.4 is the first 5 minutes below the first LD. We've entered at 9.59. As far as I remember, in reality, I didn't enter here. I entered at 10.4, but we'll try this too. A 0.25 at the first one, and a 0.25 at the second one. If we get another PC, we will add another 0.25 or maybe 0.5%. It depends on the context. Right now, I'll go with 0.25. I don't exactly remember how much of this on this trade, to be honest. We can mark the potential PCs. 10.9 could be a 5 minute one, but since we've entered at 10.4, we're not going to add here at 10.9. 10.14 will be the next one, the 50 minutes intervals. 10.29 will be the next one. We just closed right here, 10.14. So that's a 50-minute candle from 10, from right here. This is the open till here. It's not a PC particularly. It has also a bit of shadow. It's mostly buddy, bearish buddy. We could have added. But since we've added exactly right here at 10.4, there's no need to do that. But if you add here at the entry, at your second entry, you should add small. You shouldn't suddenly add 1%, 0.5%, or stuff like that again. 10.29 is a really good one. Did we take? We haven't taken this second LD. We might not take it. I'm not sure. We've taken this low. We've taken this low. We'll add another 0.25. But since we add here and we don't wait for the next LD, then with the same stop loss, then if it comes lower, we won't add to it anymore. This is the third 0.25. If we hadn't closed 10.29 right here, the 30-minute PC, we wouldn't have added this 0.25. It would be fine with a 0.5%. Then target is the next GC or the end of Monday or the end of the week. We also took this LD. 3 positions. We'll go break even, and by break even I mean stop at the low, at the lowest low. It's not actual break even, but if we go break even on this right now, it will get stopped out. So low, stop loss at the low, less risk. The end of the 4 hour will be at 1, around 1, and the end of the day will be at 5. 1 wasn't the GC, 5 wasn't the GC, but you can take profit at 5. On the higher time frame, this looks really good. To the upside, we can. Oh, I remember this was the SR level on the higher time frame. We want to target here, and this was the LD on the higher time frame. I guess my target was right here, the LD, but I would have taken profit before this highs. 1 before this highs, 1 just before this LD. 3 positions, and we don't fully close the positions. Never. We never close the positions in full until we get to the targets. This is of course hindsight, but this is how the trade was actually done. Even on Tuesday and I guess it was on Wednesday. On Wednesday that we went down again, we didn't close the trade because stop loss was still at the low. Good sign. Okay. Target was hit. It hit on Thursday. We entered on the first stage of the week, in the first day, low of the week. Then the high of the week is most probably on a Thursday or on a Friday, as we've talked about till now. That was how many R? The first position was a 6R. The second one was an 11R, and this one was an 18R. Of course, I took profit before reaching the LD, so it was a bit less than that. Let's go to the third one, third example. I'm not going really fast, to be honest, but that's fine. I'm going into detail for each trade. The third one is Frank, CHF. It was on November 22. Okay, this was a really good trade. I posted this on Twitter, so if you go back to this date, you will see it. You'll see the exact rate. I don't know if I posted it beforehand, but I entered because at the high around here, and I had many take profits, which I shared all of them on Twitter. Take profit, take profit, take profit, something like this. I don't exactly remember. Let's go through how I took this trade. The overall context is, first of all, we have an obvious high here, an obvious structure. It is the high of the previous week. We have at the left side this structure right here, this LD. This is our LD above this high, and on the high time frame, of course. And then we're on. Oh, we were on Friday. It's against the weekly profile, but it was too clean to ignore. That's why I took it, especially because of this high time frame high and this LD. Just give me a second. I'll be back in like 10 seconds. Okay, I'm back. Sorry about that. Okay, this was too clean. We got a 4-hour candle close. It was a clean 4-hour GC. Not very, very clean, but it was almost an A++ one. It was above this structure right here, and on the lower time frame, it was also clear, I guess. Let me just see how it was. This was the high. We're on a Friday. We had Monday right here. This was the weekly profile. Monday opened. Monday manipulation to the downside. Tuesday, and we got this range. Tuesday took everybody out. Almost took this low. Didn't. Then going up Wednesday, Thursday, and Friday. So if we had entered on Tuesday or somehow Monday, of course we would have gotten stopped out if we entered on Monday. But if we had entered on Tuesday, we could have held till Friday to target this high. But for this short, I was waiting on Friday, and what I got was a 4-hour GC to the upside. The GC started at 5. Where is it? Right here. And then it ended on 8:59. The next 4-hour started at 9. Okay, so we got this GC above the liquidity, above the high, and above the LD. So this was a beautiful one. And when we started 9, we suddenly went up again. I was waiting for a lower time frame GC just above the previous 4-hour GC. Let me look at it. Before we closed the 4-hour from 5 to 9, we were ranging right here. Okay, let me remove this arrow. We don't use arrows that much. We are ranging here before the close of the 4-hour. Now, when we have a range just before the close of the 4-hour, we always wait. Even if we don't have a range, we wait for a lower time frame GC. Okay, something with a good push to the upside, something scary, and then we'll go short. Now let's see. The next GCs will be at 9:14, 9:44, 9:59, 10:40, 10:29. 10:29. Okay. This is 9:29. We might also add to the positions or enter any positions if we're in the middle of this candles on the 5-minute ones, but they're lower probability. We have to be careful. A bigger stop loss usually, especially if they come quickly, if they're not that clear. But if they're very clear, we might add to our position or enter with a smaller risk. Okay, 0.25 usually. Let's wait now and see how it goes. 9.7. We don't have a GC right now on the upside. 9.14. This could be one. It's a small one, to be honest. 9.14. Let me just check the 15 minutes. It looks good. Let me check the LDs above. There's not much, no LD. Even if we add here, we should be more careful. I'm not sure if I added my position here. This looks a bit quick, to be honest, but if we do this, I guess I'll do it with a bigger stop loss since this is the first step, or I'll wait more for a candle that starts from this area and closes more on the upside. And since I talked about in the last session that when we enter our first trade, it will usually make the next trades a bit more risky because we base all the trades that we enter based on the first entry, and all the stop losses will be the same. So that would be a bit risky because if I enter again on the upside, I'll put my stop loss again at this stop loss, and all of the trades might get stopped out. So it's better if we wait for a clear displacement to the upside above this area, not just a 1-minute candle close above it. It's the end of the 15-minute candle close, yes, but it's just 2 1-minute candle, and I want a bit more time to spend above this area. But this might also work. Okay, let's see what 9.29 will do. 9.29. This is a 30-minute candle with a bit of shadow, a bit range right here. Very small SR in this area, but it's very small. You could again consider something like this. Since price is ranging, we might get another GC to the upside, a 5-minute one, a 15-minute one, even a 1-minute one, and then you can add to the position or enter the position. It's going down. I guess I should have added at 9.29, but I didn't. We could have added there. But since this price is going down, that's fine. I'm not going to touch it. This is done. Let's wait for 9.59 and 10.14 if we get it. Okay, nice. In the middle of these candles, we usually do nothing. We wait for 9.59 exactly. So the 1-hour candle closes. Do we have a 1-hour close above this, the high of the 4-hour GC or not? Yes. Did we do this move that we talked about? Yes. Especially this move to the upside. That's 9.49. That would have been a really nice 5 minutes or 10 minutes. A 5-minute GC. We could have added to our short exactly at this 5 minutes GC. It would have looked like this. If you look at it, this is a very clean candle. I actually didn't notice it, but since it is very clean, it's a very sudden to the upside from here. You could have had it same stop loss. It might get stopped out. It might not. I guess it didn't. At this point, 959. It's above the first entry. You could add. You could not add. It depends on your risk level. But the max that you should risk on each trade, even if it's an A ++1, it's 1%. You shouldn't risk 1% on all the trades. The best trades could be overall 1%. Okay, with all 4 or 5 positions, 3 positions, 2 positions, not more. This is too much. And the A++ setups happen, or A+ setups happen like maybe twice a month, once a week, stuff like that. So not every trade is an A++1. We're going to talk about it today in the live stream before FOMC or after FOMC. This would have been. This is Friday. Since we're also against the weekly profile, we will do a 0.25 in here and a 0.25 here, and we don't make it more. Even if it goes up again, we're too close to the stop loss, and we're in Friday. We don't know what the open of the next week will be. Suddenly, it might open right here, or maybe to the downside. So we will hold, and we'll wait. This is a max, 0.5%. The target will be the low before the breakout, the obvious one. There are also this low, this lows. This one is the more obvious one. It's an SR level right here. You can see all the take profits on Twitter. I've posted them before, that I've taken profit along the way. And I guess I got lucky because the new week opened and it suddenly went down. It opened right here. I was in good profits when the week started. But as you see, we cut this high exactly right here. Just do it a bit faster. Done. This was the last take profit. Entry was Friday. Exit was Wednesday. Since Monday was the high of the week, you could have also closed it Friday or Thursday and closed only partially here. You could have closed at the PCs on the downside or below this SR level when we got this PC right here. Let's look at the PCs. You got this huge one, beautiful one. You could have took partial here or closed fully here. I closed before hitting this low, just above the LD right here. And maybe we could have hold the position till Thursday or Friday. This is, I don't want to call it legendary, but this is something that it's one of the best in this game. Entering on weekly open and then closing on weekly close is something you will not find almost in most places out there. Let's see what Thursday and Friday will do. This is Thursday and Friday. Take profit on Thursday and Friday. This is the next week. Oh, we actually went even more down. Friday again. And even in this week, Friday was the low and Monday was the high. That was the end. Oh, right. There was another example right here. I also did this trade right here. This was the end of this trade. It potentially gave us, with the last position, a 32R trade, but of course, I don't hold until then. I held until 20 Rs right here, but it wasn't a full 20 R trade because I took a lot of profits along the way. It was 8 to 9 Rs in total. We also did, with one of my students, did one trade right here, since you can obviously see the SR level and the weekly and daily flows below it. Right, this is the PC candle, the daily PC. Very obvious, very objective. Before this area, it closed just before the wicks. Then we fractalized it. I guess we closed the 4 hour below it. This 4 hour. But unfortunately, we didn't get the lower time frame PC under this 4 hour. So we couldn't capitalize on it. And instead of coming down and then going long right here, we didn't do anything. And this was a Friday. So it was against the weekly profile again. But we didn't get the entry. So we didn't do anything. This area was also very clean. Nothing below this SR level until this structural low, this swing, which was really far away. The PC right here did its job. Price went up. Then on Monday, this was one of the best trades that I've done till now in my life, I guess. We opened the week right here. This is a Monday. And overall, when you look at it, as we've talked about before, you can see that this is a weekly PC to the downside. It was actually a weekly candle, sorry. Daily was a PC, 4 hour close below it. It was on a Friday, but then on the Monday, what we did was we were ranging right here. Liquidity on the upside, almost equal highs. And then NLD right here in this range. NLD relevant to this area. But of course, this could be also an LD of this range. If we range about below it, we will consider this NLD and this as a swing high. For now, what my eyes were seeing, as far as I remember, was this area, this liquidity above. Overall structure on the weekly and monthly daily is to the upside. We have done the PC below. We're going up. On the lower time frame, we have the SR. Then what I needed was a move to the downsides and then going up. But how much it will come down, I don't know. We don't know. We're not going to say, for example, this is, I don't know, an FVG on the lower time frame. There is an FVG here. Or, I don't know, this is like liquidity. Or this is a breaker. Stuff like that. We don't care about this stuff. The breaker is not going to protect our trade. If this is a breaker, or I don't know, this is an order block, that's not going to protect our long position or our stop loss. We will wait for a PC. How much it will go down, when it will happen, we don't know. It might even come here. It might just come here. It might come here. We don't know. We're not going to predict it. We're not even sure if price is going to come down so that we can go long. So we're not going to predict it with arrows. It doesn't matter to us. It might as well just go up, and we might even go short. Okay, since it's a Monday. Start of the week. We opened the week right here, Sunday, 17. If we got the manipulation to the downside, ranging, if we got manipulation to the downside, then we know that probably this might be the low of the week. Are we sure? No. Are we sure we're not going to get stopped out? No. We might get stopped out. This might be even the high of the week. We might enter along right here, and then price will go down for the rest of the week. Okay. Maybe this is even the high of the, I don't know, months or something. So we don't know. We'll wait for the PC. Let's see when we'll get it. The 4 hour let's divide the time and fractalize it. We're starting 9 right here. Before 9, the 4 hour before 9, we don't have any PCs or GCs. 5 started right here. We're ranging in 5 to 9. No lows have been taken. No highs have been taken. So no GCs, no PCs. Let's see what 9 will do. Sometimes at the start of the candle's 4 hour, we suddenly get a huge movement to the upside or downside in the first hour, first 30 minutes or something like this. This is our SR. This is bullshit. Let's remove this. We just have this LD right here, relevant to this SR. And we go to the 1 minute. Price still ranging, no close below here. Let's mark the PCs that could happen. One is 9:14. This is not a PC to the downside. 9:44, no PC. 9:59, nothing. Still ranging, still not below this area. 10:14, not below the purple area, DSR level. If it closed right here, this would have been a PC, but it's so small that we don't even consider it. We need a good displacement below this area, a good displacement to take everybody out in this area, right? And most probably the stop losses that the ones who are going long in this section are at the LD right here. So we most probably should wait for the LD because it's a very obvious one. It's the only one that is very obvious just below this area. So stop losses will be right here, lots of them. A good displacement to the downside will work. 10:29, 10:44, and 10:59. Okay. 10:29 was nothing. 10:44 is a PC. It's a good 15 minutes PC. But since we have this low here, and are we close to it and how much? Let's check. We're 5 pips just above it. So because of this, I didn't enter this trade. Because of this PC just below the 9 a.m. open, I ignored it. I wanted this to get taken out. It was a bit far away when you look at it like this, but I still wanted it to get taken out. If it didn't, how did I know it will reach here? I didn't know. You have to get comfortable with not knowing. I didn't know that it will reach here. I have no secret algorithm with me. I have no holy grail. It might have just went up like this and leaving me behind. But I thought if it reached here, I will go long below this. If I get another PC. This is 10:59. Let's see. Okay, that's good. 10:54 is a 5-minute PC right here. 10:59 is right here. You could have added a 10:54 this 5-minute PC. Price is too strong right now. Maybe a reaction or this is a 1 hour. So we'll wait for the 1 hour. Let's see how it goes. What else do we have here? We have this lows. They're not significant. This one is also only the significant one. We'll enter our first position at 10:59. Okay. Right here is our first position. We did with my student a 15 pips stop loss. Right here. I didn't know that I'll get stopped out or not, but I guess we didn't get any other entries. We wanted actually to get another entry, but we didn't. Let's go to the 1 minute. What happened was this. I was waiting for another BC to the downside at 10:15. That would have been at 11:14. That would have been this. But it closed just at my first entry, so I didn't do anything. Since this is a Monday, you should usually risk a bit more. If this was a 5-minute PC, I should have risked less, but it's a 1 hour PC just below the previous 4 hour, below the 9 a.m. open. LD has been taken. Doll is at the upside, still on liquidity. And weekly and daily are bullish, so I should have risked more. But we risked, I guess, 0.5% or something like this, and we couldn't add to the position. We didn't add because we wanted the RR to be as good as possible, and I guess it didn't came down as much after this. I don't exactly remember, but this is how it went. We didn't go break even right here at Tuesday. We waited a day. Tuesday again came here. We didn't get scared. We did nothing. We took a bit of profit at DLD right here, but we held till Friday. I guess till Friday was right here. Wednesday, Thursday, Friday. Because we had NFB also. Entry at the start of the week. Take profits at the close of the week. And no movement in the middle will make you not confident. You should just hold without even knowing that it will reach the profit target or not. This was news. Just before this news, at this area, we took a bit of profit. And before this news, we took a bit of profit. After this news, we took, again, more profit. And we closed the rest at Friday. And that was it. The next week started right here. We had closed fully on Friday. Trade opened on the first day of the week after the manipulation. At the manipulation, actually, not after it. And it was in total 12 R. We captured 6-7 Rs, I guess, on this trade. The recording has been 1 hour and 18 minutes. Let's check. I'll do the next one, the last one for now, which would be the BTC trade. I have reviewed this many times for you guys, I guess one time and 2 days ago again, but since it wasn't recorded, I'm going to do it again. It's about how I caught the BTC high and I also posted about it. I couldn't properly capitalize on it, but still, it was a really nice trade. It was right here. I posted that this will be the high of the week or month or something like this. On Bitcoin, it was a Monday. For crypto, the way that the weekly profile works is that Monday is usually the high or the low of the week, and then Sunday is usually the high or the low of the week, depending on the weekly candle. If the weekly candle is bullish or you expect it to be bullish, then Monday will be the low right here, and then the rest of the week price will go up, and the high of the week will be Sunday. And if you expect the weekly candle to be bearish, then Monday right here will open. It will be the high of the week, and then Sunday will be most probably the low of the week. After this many days, Sunday will be the low of the week. So weekly profile right now, this is Monday, and since we were at the high, you could also see the overall structure. Let me use the replay button. You can see that we're going up nothing at the left, but we have this area right here. It's not like we're right here. Okay, it's very different. This is very different with what I did. In this kind of structure, you will not know if this is the high or not. Nobody knows. But if you look at the trade that I did, it's different. It's not like this. We have this structure right here. We have a weekly close, a monthly close. It's different. How I capitalized on this was this is how I did it. We had the SR level on the monthly time frame. So I entered on the 1 minute time frame on Twitter. Everybody was like, you're doing something really risky. It's not going to happen. 1 minute time frame on Bitcoin. You're going to get stopped out, stuff like that. They didn't know that I'm looking at the monthly. After this GC on the monthly happened about the SR level, I knew we have an RTF. Okay, this was an RTF, and I was waiting for a weekly candle above this monthly candle. If we fractalize it, monthly, weekly above. Did we get the weekly? We got a weekly just above this candle. Actually, this was above it, so let's see. Weekly just above this candle. Then this is the weekly GC. This is the monthly GC. And then above the weekly, again, we'll do the fractality. Above the weekly, we get our daily candle. It's not particularly a good GC, but since it's a Monday, I still used it. Or maybe it was this one, actually. It was this one, not this. Because this closed above the high of the weekly GC. This was the daily GC. And above the daily GC, I wanted a 4-hour GC. Okay. We go to the 4-hour. Above the daily GC, the high of the daily GC. Okay, not the close or the open. We always do the high of the GCs or the PCs. Above the high of the daily GC, we got this 4-hour GC. This is the 4-hour. And above the 4-hour, we got, I guess, a really nice 30-minute GC right here. And usually, when we go as low as 30 minutes or 50 minutes, we don't wait for another GC above them. 30 minutes, 1 hour, usually 30 minutes or 50 minutes is the limit that we will enter the trade. We don't wait for a 5-minute GC or a 1-minute GC above them. It might happen, but we don't wait for them. If they happen, we will add to the position instead. Okay, this is the high of the 4-hour GC. We're above this high right here. This is liquidity. And how I entered this was, I was a bit, I guess, impatient. I don't know why, but above the 4-hour GC, I saw that we're closing candles. And when we closed this 15-minute candle right here, I entered the position. Now looking back at it, my stop loss was 108, 600, I guess. I posted it on Twitter. You can check it out. I'm not exactly sure. It was 500, 600, something like this. When I look back at it, I think I was impatient. I wanted to get it a bit faster. I thought maybe it will leave me behind, but I should have not entered this. It didn't get stopped out, but I should have not entered it because there wasn't really, until right here, there wasn't the proper one. This was good, not bad, but I guess on the lower time frame, it wasn't what I wanted, and I still entered it. Let me check it on 1 minute time frame. Yeah, since price was ranging right here at this area, and also we had this high right here, I thought we should get a good GC to the upside, but since the 50 minutes closed right here, it's also a 30 minute, right? It's also a 30 minutes. It's not just a 15 one. Since it is 12:29, that would be the end of the 30 minutes candle from 12 to 12:29. I entered my first position, and then I wanted to add to my position if we get a good GC to the upside. This is the 15 minutes one after the 4-hour. The first GC, first 15 minutes one. The next one will be at 12:44, 12:59, 1:14, 1:29. I hope by now you get the logic behind this time intervals. They're the exact point where the PCs and the GCs get closed, and when they get closed, they will give reactions. People will react to them because people use the close of the candles to decide if they want to go long or short. So if people get a close above this area, a candle close, a good candle close to the upside, they will go long because of the breakout. The shorts also get stopped out, and there is one other side of people that will try to go long on the pullback of this candle to this SR level. They think price will go up. That's why we're capitalizing on this move and on this PCs and GCs. In this case, GC. The close of the GCs are important because that is when people are waiting for the candle to get closed. We will now see what happens at 12:44, 15-minute GC. That's not a GC. That's a close. That is exactly again right here at my first entry. This is also not a GC above the. It is actually a GC above the 4-hour, but not above this low time frame area. So since I've added right here at 12:29, I haven't added to my position in here. No GC at 12:59 again on the lower time frame. Let's see. This is also not above this area. A 1-minute candle, very small. We don't care about that. We're going up. We're closing a really good GC at 10:29. This is where I posted that I've added to my position right here. 10:29. Same stop loss. And the rest is history. Target was shared beforehand. Target was just before this low. 2 positions. One was 10R, and one was 17 risk to reward ratio. I should have added to my position right here, but I didn't. It was another GC that was given. It was a 50-minute, 30 minutes, and a 1-hour GC right here at 9:59. I should have added, but I didn't. I was instead a bit scared. And it took a lot of time to reach this profit target. But since you clearly see the SR level right here, so we need a good PC to the downside below this to go long. It takes a lot of time. We got the PC to the downside, and then we saw the reaction. This was the PC at 5, taking the PC on the lower time frame and then going up. If we close the position not based on price but based on time, it would have been a Sunday close, right? Open the position on Monday, then taking profit on Sunday. That would have been Sunday, around this area. Based on the 4-hour PCs, you could have taken profit at this PC right here, or maybe below this at this PC. It's a low time frame RTF, and right at this PC right here, below this structure, and this one also, this, or this. In here also another PC. So that is how you could have taken profit based on the candles. For the examples, this was all the examples that I talked about the other day, and I guess it's more than enough. There are other examples that we're going to talk about again, some really good examples, great trades. But remember that this is just the ones that have worked, not the ones that have not worked, because maybe half of the time you're going to get stopped out, even with this model. Okay, you have to be really patient, since the waiting and the patience is part of the model. We don't close at 1 hour or 2 hour thinking that that's good for the month or for the week. The holding is part of the actual model. So if you don't hold the position, you're not capitalizing on the model. You're not doing the model. It's not the same. So you have to wait, you have to be patient, and you have to hold your positions most of the time till the end of the day, till the 4-hour PCs, and never, never, ever close the positions in full before you get good PCs to the downside or GCs to the upside, or till the end of the day, or till the end of the week if you have entered in the start of the week. Never close your positions in full. Always, at least if you're not sure, hold a runner. Even if you think you're going to get stopped out in break-even. We haven't still talked about break-even. Maybe the next session after today will be dedicated to break-even and take profits. But always hold a runner. Even if you close, for example, right here at this PC, hold a small runner if you think this is going to go up. Hold a small runner and let it hit break-even, okay? Be fine with it. Be okay with it, because that's going to happen. Most of the time, actually, you're going to get break-even. So get comfortable with not knowing what getting break-even, and please hold the positions. The most important question that people ask, and the most repeated one, is that how do you know it will go down until, for example, Sunday or Friday? And the answer is nobody knows. Nobody on this planet Earth knows that Friday will be the low of the week, or where price will go. But you have to trust yourself. You have to get comfortable with losing or getting break even, and losing a bit of the profits that you've made, and let the trade just go your way. If it didn't, that's fine. Just look for another trade. But please hold, as that's the most important aspect of this model. See you all in the next video.